Welcome back to MarketSnap's daily market rundown. It was a day of two completely different stories. Oil prices crashed on hopes for peace, which sent the Dow soaring, but it also hammered energy stocks and, in a bizarre twist, dragged down the very semiconductor stocks that usually love a good rate cut narrative. The market is basically saying it's relieved about geopolitics, but terrified about what comes next for tech earnings. Let's start with the headline numbers. The Dow Jones Industrial Average jumped over 260 points, closing at 52,210, a solid 0.5% gain. The S&P 500 barely budged, finishing flat at 7,413. But the real story was the Nasdaq, which actually finished in the red, down 0.18% to 24,932. The Russell 2000, our small-cap gauge, had a better day, gaining 0.6%. So a clear rotation out of the mega-cap tech names and into the rest of the market. The S&P 500 is essentially stuck in neutral. We're in a range that hasn't broken out for over 2 months. The big question is whether this week's earnings from the mega-caps and the Fed decision will finally provide the catalyst to break us out. Some analysts are pointing out that the S&P 500's top 10 stocks are trading at a 21x PE, far below the 1999 bubble levels, suggesting the market isn't as frothy as the headlines suggest. The Nasdaq is feeling the heat from a massive rotation out of chips. The narrative is shifting from AI hardware is the only game in town to maybe we've spent enough on that for now. We saw a massive divergence today between the old guard of tech and the new. The big winners today were all about the software and services rotation. Shopify absolutely crushed it, surging over 11%. SAP was up nearly 7%, and ServiceNow and Salesforce both jumped over 6%. This is a clear signal that money is flowing from the picks and shovels of AI hardware into the companies actually deploying the software. Palantir also had a strong day, up 7%. On the flip side, the semiconductor bloodbath continued. Nvidia dropped another 5%, and it wasn't alone. AMD fell over 5%, ASML dropped nearly 6%, and SanDisk crashed a staggering 11%. The catalyst, the massive IPO of Chinese memory chip maker CXMT, which soared 500% on its Shanghai debut. That's a stark reminder that the global chip race is heating up, and it's creating uncertainty for the established players. Beyond the chip story, the market movers were a mixed bag. Apple managed a small gain of 1.1%, while Tesla and SpaceX both slid over 1%, continuing their recent downtrend. Micron also dropped over 2%, caught in the chip sell-off. The real action was in the options market, where traders are bracing for massive moves from Microsoft, Meta, Amazon, and Apple later this week. Zooming out to the weekly picture, the winners list is dominated by storage and data center plays. Seagate is up 18% on the week, Western Digital is up 15%, and Digital Realty is up 15%. This tells you the long-term demand for data storage and infrastructure is still very real, even if the day-to-day trading is volatile. The weekly losers list is a who's who of high-flying names that have come back to earth. Tesla is down a brutal 18% for the week, Uber dropped 10%, and even SpaceX is down nearly 10%. This is the kind of mean reversion that reminds long-term investors that even the best stories can have painful drawdowns. On a sector level, over the past week, it's been a tug of war. Basic materials and energy have been the top performers, up 2.5% and 1.8% respectively, driven by the geopolitical premium in oil and commodities. Communication services has been the worst sector over the week, down 2.5%, followed by consumer cyclical and real estate. The market is clearly rotating away from the high-growth, high-valuation names and into value and cyclicals. This is the biggest week of the summer. It all kicks off on Wednesday, with Microsoft and Meta Platforms reporting before the Fed decision. Then we have Amazon and Apple on Thursday. The whisper number for AI capital expenditure is astronomical. If these companies don't deliver on the revenue side to justify the spending, we could see a significant correction. You can find exclusive earnings transcript summaries on MarketSnap. The macro backdrop is fascinating. President Trump is publicly pressuring new Fed Chair Kevin Warsh for rate cuts, calling him fantastic, but saying the U.S. should have the lowest rates in the world. Meanwhile, the market is pricing in a 65% chance the Fed stands pat on Wednesday, but a potential hike is on the table for September. The bond market is getting oversold, and some legendary bond investors like Lacey Hunt are finally folding on their long-term treasury bets. That's a major signal. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. This week is a minefield of catalysts, so stay sharp. Don't forget to check out our SWOT analyses on the tickers we covered today to help you build your long-term strategy. We'll see you tomorrow.